DailyFX BYOA contest for week 20. This is trading week of August 7th to August 12th. The pair that I'm looking at for this analysis is the Great British Pound USD. This is a 4-hour chart of it, and as you can see here, I've already entered the position, so this is a live trade I'm taking. But I just want to talk about why I got into this trade and what I see going forward for the Great British Pound USD. As you can see right now, I'm up about 56 pips. I am targeting about 166, 150 pips, and I've got a stop loss at about 55 or 60 pips away. So we'll come back to that in a second. But let's just first talk about the technical side of this. As you can see here, the Great British Pound on the 4-hour chart, it's been in a very solid trading range for a while. And this is definitely very important for us if we're going to trade within the trading range. You need to really identify where are the true horizontal lines and how are you going to trade off of those lines. Okay, it's one thing to figure out where the lines are, but it's a completely other thing about how you are going to trade off of the lines. So basically, what you really need to look at is you need to focus on price action between these ranges, right? So we've been bouncing back and forth for about a week and a half or so, and then we had a nice bullish run at the end of last week. This bullish run ran out of steam pretty quickly, within a day or two. So if you take a look at it from this standpoint, if you're looking at the candlesticks, for example, you can see the bulls are controlling price action until we hit the upper range here. Now this upper range, we start to get really long wicks. Okay, these long wicks to me signal that the bulls are just simply running out of steam, and that is when we want to enter. Okay, you don't want to trade off of these horizontal lines if you're closing right next to it. You want to look for these wicks. So for example, here's one. Here's another. Even these up here could be kind of considered decent wicks. Here's another one. So again, we're not closing on the line, we're closing away from the line, and that is what we're really looking for. We want to see those bulls or the bears, which depending on the momentum, we want to see them run out of steam before we get in on the other side. Okay, so basically it's a very, very simple technical enter into this trade. Okay, so as you can see here, enter technically. Okay, you want to look for fundamental follow through, and then again you want to exit technically. So what do I mean by that? Okay, I mean our technical enter here would be going short once we see these long wicks, okay, these long upper wicks against an upper trend line, or sorry, an upper horizontal line. Once I see that, that is a technical enter for me. Okay, yes, you can put other indicators on there like the Bollinger Bands like I have here. But to be honest, price action tells me everything I need to know anyway. So that's an enter technically for me. Now, the fundamental follow through is this. We do know that the stock market's going to open here in about an hour and 15 minutes for the first trading day of this wild week that I'm sure we're going to have. The United States got downgraded by S&P last week over the weekend, so I think a lot of traders are expecting some major volatility, and so am I. I think a lot of what I've been hearing a lot over the news and just different articles that I've been reading is that they're expecting the dollar to get weak. I personally like the dollar to get stronger during this entire ordeal, and the simple matter is this: before S&P even downgraded us, we had a 5% drop across the Dow and the S&P, and we're really starting to slip into a danger zone with the recession. And to me, if we get to some sort of global downturn or we get into a global recession, I don't want my money anywhere else other than in dollars, and that's just my simple analysis of it. There's a lot of riskier assets out there. I mean, where are you going to put your money if we get into a very serious recession? If we get a double dip recession, where are you going to put your money? So fundamentally, I'm definitely bullish on the dollar. Okay, so I know that may be, we're looking at a 4-hour chart, and that fundamental analysis may, reach well beyond this 4-hour chart. But you still should have some sort of sentiment in regards to one way or the other. Now, I personally would be bullish dollar much more than I would be bullish Great British Pound. I mean, the Great British Pound is definitely dealing with some inflationary issues, possibly looking at some more stimulus going on over there. So I'm definitely not bullish on the Great British Pound side. Last but not least, exit technically. Basically, you want to look for the same technical sign to get out. So, for example, if I see a candlestick that looks just like the one we're on right now, and it closes right on this trend line or closes below it, or sorry, this horizontal line, uh, that is not telling me that I need to get out yet. I want to look for bears losing momentum. I want to look for lower wicks that are very long along this bottom horizontal line, and that will give me an idea of when to get out, or maybe when I should start considering exiting this position. So again, enter technically, look for fundamental follow through, and then exit technically as well. And then last but not least, I'd love to talk about the risk reward. You should only be taking setups that allow for 2 to 1 or 3 to 1 odds. I mean, honestly, this is a game of probabilities, and if you're not using the probabilities into your favor, you're going to lose most of the time, and you're going to lose money, and that's the most important thing. You don't want that to happen. So personally, to me, if I'm only risking 55 pips and I have a very strong possibility of getting at least 100, possibly 150, or in this case 166.3, to me that's a 3 to 1. I mean, if I lose that trade once, but I hit it one time or hit it twice, I'm still going to be out, ahead in terms of profit at the end of the day, and that's got to be the most important thing to me. So that's about it for my analysis of this video. Like I said, I hope to be out of this trade within the next 24 hours. If it carries on longer, it's not too big of a deal. But I am targeting that level down there around 162.5, and we'll see how this one turns out. Okay, so good luck trading this week, and thank you for watching.